folks. It's April 3rd, and this is my morning update. All right, I'm going to tell you what I am seeing. First off, we got our correction A, B, and C. A, B, and C. We had a five-wave rally, as I'll show you here in a minute when I dial down to the hourly chart. We had a counter trend A. Now it seems that we're having a B, and soon we're looking for a C wave to complete the counter trend rally somewhere in this area. Now, you also know that we had a death cross here. It occurred a few days ago, but don't think of it as a timely signal. It's basically reflecting what has already happened. Three out of four death crosses are lagging signals and should not be taken very seriously. Moving averages are lagging indicators, so when this cross happens, most of the time it's reflecting what has already taken place. Now, this right here is our 2019 value area. Value area high, right here. This is our value area low, and this is our volume point of control. All right. Now, the volume point of control within the value area is the longest volume bar within the value area. Now, remember, we are in an earnings recession, okay? So, at best, the best you could possibly hope for with some sort of miracle is an end to the year at a no growth level. The no growth level is right here somewhere. According to the valuation model that I use, which is part of the TRI model, no growth is at about 2740, 2760, somewhere in the 2700s. This is 2760 right here. It's the bottom of the value area, low. Now, you know that when momentum builds up, markets always tend to overshoot. So we could go as high as 2885, where A would equal wave C. A, B, and C. All right, now C doesn't have to always equal wave A. It could fall just short of it. And at the same time, notice what happened. The 50-day moving average is downsloping and it continues to fall. So think about this ABC as a mean reversion to the falling 50-day moving average. What else do I want to point out right here? Let me see if I can use a smaller marker. All right. So this red candle here 2 days ago was followed yesterday by a green candle, and the green candle closed above the 50% mark of that red body from, that was Tuesday, or that was Monday. Today, that's Friday, so that was Thursday, that was Wednesday. The red bar was Wednesday. The green bar was yesterday, Thursday. So Thursday's candle turned out to be green despite the jobless claims number. And remember, things are already priced into the market. There's nothing new here that the market doesn't know already. It's priced in. So green bar closed past the 50% mark of the red candle, which makes this candlestick pattern a piercing pattern. Normally, it's a bullish pattern. What is it going to take for us to believe that wave C is underway? And I'll talk about that when I drop down to the hourly chart. Anything else I want to mention here? I think that's about it. Again, no growth is the best we can hope for. Okay, right here. And earnings recession is more likely than anything else. In fact, the estimates are for 30 to 35% hit in earnings. Now, let me tell you something. Estimates are estimates, okay? They don't factor in miracles and unforeseen events, because remember what the estimates were back in January. They were the exact opposite. Everybody was foretelling an S&P expansion up to 37, 3,800, and this and that. They would come up on CNBC, stare you in the eye through your TV screen to tell you where they think things are going. Well, now they're telling you where the things are going, only in the opposite direction. So I don't believe estimates, whether they are to the upside or to the downside. I will let my models tell me what is the most likely outcome. Now, this is the daily chart. Again, recap. A, B, and C was the correction. A, B, and C was is the likely mean reversion move to this area, which, by the way, is very consistent with something we already know, that on the heels of an ABC, the counter-trend rally more often than not, reaches the span of the B wave. Okay? And sure enough, this area right here is inside our B wave span. All right, enough with the daily chart. Let me drop down to the hourly here for a minute. Tell you what I'm seeing. Okay. It's no rocket science that anyone with a trained eye would look at this chart and say, oh, maybe, just maybe, we have an inverse head and shoulders, a basing pattern forming. Okay. Now, this was the A wave. It unfolded in 5 waves. And whenever a 5-wave move happens, you will see a pullback, and then another 5-wave move will likely begin. Okay? Again, it's far-fetched at this point because we're about to get the NFP report. And I don't know how many people have the appetite to buy, but normally the most unexpected outcome is to be expected. Now, here are the clues, by the way. Assuming that this was A, B, C, D, and E, what we had on the heels of this 5-wave move is a pullback, which also appears to have unfolded as an ABC. And then we had another rally, ABC, that actually managed to take out the high of wave 5. That was a fake breakout. Okay, fake breakout right here. Now, ABC followed by ABC, and now we're having 1, 2, 3, 4, 5. Okay, 5-wave move down. That's exactly what an expanded flat pattern looks like. Again, I'm going to use gray this time. A, B, C, counter trend move that manages to take out the high of wave 5, followed by a 5-wave move down. 1, 2, 3, 4, 5. So 3 waves down is A, 3 waves up is B, and then 5 waves down is C. Okay? Interesting. So what does that mean? Is this wave 1, wave 2, or maybe wave 2 was here? We'll find out soon. And then we're about to get wave 3, 4, 5. I think so, but here's what you need to know. First of all, this right here, this whole area, is the April volume profile. And it's got 2 important areas to keep an eye on. this high volume bar, you see this here? It's a double distribution. Okay? This high volume bar and this high volume bar is they are our support and resistance. Okay? So you'll see here yesterday that fifth wave almost got down to this high volume bar here. And we're still basically, the prices are still auctioning inside this zone. Okay? So far, the April value area is developing in between those two levels where, denoted by this double-headed green bar. Now, what does it take? What is it going to take for us to know that we're headed higher? We need to take out this level right here. 25, 40, 50 needs to be taken out to confirm the start of wave C, A, B, and C. In fact, all it takes is for price to take out yesterday's high. Okay? Now, I don't know how price is going to react to the NFP today. I assume maybe there'll be a knee-jerk reaction and then the unexpected. Who knows? We'll find out very soon. Or we could easily come back down here before turning back up. All right? So again, expect the unexpected. But do not think that this head and shoulders bottom is going to fulfill its objective. Okay? What is its objective? If you measure the distance from the bottom of the head to the neckline, we're talking this, like about 31.15 or so. 31, yeah, 31, yeah, let's say call it 31.15. Do you know what this area was? This area was right about 31. Yep, it's the top of the B wave. The top of the B wave. Right about here. It's what happened. It's the reaction that we got when the Fed came out and did their first cut on the back of this big drop thanks to the coronavirus. In other words, they acknowledged the impact of the coronavirus on the economy, on growth, on whatever. And they came out and the market reacted with a counter-trend rally, and then they sold into it big time. All right, so I do not believe that this inverse head and shoulders is going to lead this high. Okay, it's not. Actually, the head and shoulders is kind of like this, longer arrow. All right, so what I'm really expecting again is an ABC to this area, followed by the next phase of the bear market. Now, when I say next phase of the bear market, I don't necessarily mean new lows in store. ABC, and then the next phase of the bear market, I expect it to be A, B, C, D, E, a triangle. Okay, so you're going to have multiple attempts at breaking the lows, and every attempt will fail and will create a series of higher lows. That's my forecast. We'll see how it happens. Anyways, that's all I got for today, this morning. Have a great day and have a great weekend if I don't talk to you again.